Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest, Michael Feldshuh, CEO of Daxor Corporation. Daxor Corporation is the global leader in blood volume measurement technology, focused on blood volume testing innovation. They have developed and market the BVA 100 blood volume analyzer, the first diagnostic blood test cleared by the FDA to provide safe, accurate, objective quantification of blood volume status and composition compared to patient-specific norms for use in a broad range of medical and surgical conditions. Daxor is without question an impact company, and I'm going to let Michael tell you more about that in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence.
In the evolution of humanity across millions of years, one fluid above all has had an essential role to shape, propagate, and protect life: our blood. For more than 130 million Americans, blood volume disorders are central to a broad range of their medical and surgical conditions, from the chronic to the acute, including heart failure, hypertension, critical care, sepsis, syncope, and surgical blood loss. For all of them, fluid management guided by accurate blood volume measurement is vital. However, clinicians commonly rely on indirect measures, which are neither sensitive nor specific to actual intravascular volume. Some are costly, invasive, and all lead to considerable guesswork that makes precise measurement an impossibility. Until now. With a simple yet game-changing blood test, individualized and precise fluid management is now possible. Daxor's BVA 100 provides 98% accurate, objective measurement of intravascular total blood, red blood cell, and plasma volume. By giving certainty to clinicians, we accelerate decision-making and optimize treatment strategies. This is shown to reduce mortality, readmissions, and costs, and it unequivocally improves patients' outcomes. Backed by over 100 peer-reviewed studies and with over 60,000 tests performed, our technology is FDA cleared, approved for reimbursement, and used in leading centers across the U.S. on a daily basis. They understand that precise knowledge saves lives, that it empowers their institutions and their people. We believe precision moves the human race forward in the arts, sports, science, and also in human health. And that's why we're inspired to provide it, improving the health of millions, one blood volume test at a time. Daxor, the blood volume company.
Hey everybody, Tim from Alpha Wolf Capital coming at you with a brand new story, and I have to tell you, this is a really exciting story, and I think things are lining up just beautifully for this company. Just reported earnings, had a letter from the CEO to shareholders that I thought was absolutely incredible. Lot to unpack. But Michael Feldshuh is here, the CEO of Daxor, which has been publicly traded since 1971. Is that correct?
That's right. Yep.
Since 1971. And Michael, is there anybody that has what you have in terms of the blood volumizer?
Yeah, our technology is really unique. So we're a medical diagnostics company, specifically a pharmaceutical diagnostics company, and we uniquely have the only FDA-approved system that allows for clinicians to directly measure a patient's blood volume, and that's a very key medical metric for both inpatient and outpatient care. We uniquely hold the patent around various aspects of that system, and we're the sole manufacturer distributor of our technology.
Okay, Michael, there's so many things that I want to nail with you, and I know we only have so much time, but what I find, I mean, amazing about this story. So actually, why don't you give everybody a little, how did the company start?
So our company started in the early 1970s, and we were in the lab services business. So our founder was actually my late father, Dr. Joseph Felchu. He was a board-certified cardiologist and endocrinologist. So he had a double specialty, and he started the company to do lab service work. So we did work in cryobanking and pathology services. And during his academic period, before founding the company, when he was a fellow, he actually worked with a guy named Dr. Andre Cournon, who won the Nobel Prize in medicine. And working as a fellow with Dr. Andre Cournon, together they realized that there was a very key metric, which is to know the amount of circulating blood volume that a patient has. And if you think about every time somebody gets a transfusion or gets some kind of diuretic prescribed to them, et cetera, that's volume management, right? And it's all over the time in medicine. Anytime somebody's got an IV next to their bed, that's volume management. And so he founded the company doing lab services, but quickly realized that even though the technology existed to measure blood volume, the problem with using it in a clinical setting, it had been done extensively in research, is that the test used to take over 8 hours, and it was very cumbersome to do, and it just couldn't be done with a workflow that was compatible with modern medicine. So he set out to change that, and after the company was very profitable and developed well in the lab services industry, started to pivot in the late 1980s towards developing its groundbreaking technology.
Okay. Your dad was kind of a workaholic, huh?
he used to tell me growing up, he worked for 7 years before he took his first vacation after founding the company. I think that if you're passionate in your mission, it doesn't really feel like work. But yeah, he was a physician who was old school. He carried, his medical bag. He did house calls. He kept up his medical practice and was passionate about the company because he realized that there was a central unsolved problem in medicine, which is if you don't know the precise amount of blood volume that a patient has, then all of the diagnostics that you do, all of the therapy that follows from there is not going to be effective or nearly as optimal as it should be. So the best analogy for people to understand what this is, think about, for example, like a diabetic. Before you get an insulin shot, you measure the blood sugar, their blood glucose level, so that you titrate the insulin to match to get your blood sugar under control. Well, when a doctor gives you powerful medication, for example, to control your hypertension or to control your heart failure symptoms, or if you're in the intensive care unit and they're going to give you a transfusion, whether it's going to be saline or blood or something else, all of the time what those physicians are trying to do is they're trying to reestablish your circulating blood volume to be optimal. Why does your blood volume need to be optimal? Well, it's really simple. Your blood is what carries all of the oxygen to all the tissues and cells in your body, right? We breathe, our heart pumps, and we circulate these red cells that are in our blood. So you've got to have an optimal amount of blood volume. If you don't have enough blood, right? Obviously, we all know what bleeding out means. You stop being able to perfuse your tissues and you die. If you actually paradoxically have too much blood volume, which can occur in certain syndromes like heart failure or hypertension, or in other cases of over-resuscitation, then you can actually go into heart failure and eventually your heart will start being degraded and ineffective at pumping, and then you can have heart failure and die from that as well too. So there's actually a lot of management of this key metric, blood volume, both in acute care settings. That means, think about the intensive care unit, hospitalized settings, but also in the chronic setting, right? Like when you go to get your medication from your physician. The question that people might ask, they'll say, well, if I'm getting this medication, then don't the care teams know what my volume is, right? They're controlling it. Isn't there a test like the A1C test or a glucose test to know how much to give you? And the answer is, absent our test, there isn't. So they're managing this huge problem in medicine using what are called proxy or indirect markers. They're trying to use clinical exam, they're trying to use pressure metrics, they're trying to use certain biomarkers. All of these things are not very accurate. Some of them are costly, some of them are very invasive, and almost all of them lead to suboptimal care compared to a direct quantification. And that's what our test does. Our test is a blood test. It's performed with a tracer at the point of care, and it rapidly allows clinical teams to know with 98% accuracy exactly how much blood volume the patient has. And it provides a set of patient-specific norms to compare it with. So what does that mean? You run the test, and the care team looks at the results from our system, and it says, oh, we see that this patient, is missing 24% of their blood volume. They are missing 40% of their red cells. They have a deficit of 18% of their plasma. They can immediately give precise interventions to manage the patient's care. They don't have to guess. They don't and they don't overtreat the patient. And what medical studies have shown, and we have at this point over 200 plus peer-reviewed publications, poster presentations, journal articles, various different clinical trials. What they've all shown is that, first of all, our system is the most precise and the most accurate way of measuring blood volume, far more accurate than these proxy measures that are commonly relied on, but also that the care that results is so much better. What does that mean? If you get the right diagnosis, you get the right therapy. You get the right therapy, that means your stay in the hospital is shorter. You're less likely to be readmitted.
Return to the hospital is less likely.
Yeah, you're much less likely to be readmitted, and you're much less likely to die from your care. So right now, for example, with hospitalized heart failure patients, you get admitted, and then without our test, you'll stay on average about 2.5 days longer, but also you're much more likely to be readmitted. So our test cuts down on your readmission chances by 56%. One peer-reviewed study cuts down on your mortality rate by over 82%. And just to give people an idea about how bad things are, heart failure is one of the areas that's had almost no progress. You compare that to like oncology and cancer, you compare it to heart disease. Heart failure affects about 7 million Americans a year. And right now, the results have been that in 30 years, there's been almost no progress whatsoever. And if you're hospitalized for heart failure, after 1 year within 1 year of that, you have about a 1/3 chance of being dead within 12 months. So it's a huge problem. And we feel the root of the problem is these patients aren't being accurately diagnosed, so they can't be effectively treated. It's not that the doctors and the nurses aren't trying their best. It's just they don't have the right tool.
Which, just out of curiosity, Michael, what do you consider the TAM on this on your segment of the market?
Well, one thing I want to do is I want to be clear that our test is not just a heart failure test. Blood volume, as I said, is central to the management of patients across a broad spectrum of conditions. So there's something called syncope, which is where patients will suffer fatigue and pass out. That affects several million Americans a year. Heart failure, as I mentioned, affects 7 million Americans. If you think about hospitalized care in the intensive care units and other areas, there's over 3.5 million patients a year who are going to be affected by things like sepsis and will have surgical blood loss. All of these different areas. So when you start to look at the addressable market, you're talking well over 10 to 20 million patients just in the U.S. alone. So it's as I said, this is a really central problem. You can think about blood volume like a vital sign, the same way you would think about blood pressure or heart rate. It's a fundamental physiological metric, and a lot of different conditions can affect your blood volume. And that's why, every time you see a medical show, you see people with IV poles next to their bed. You hear people talking about getting transfusions. This is one of the reasons why Daxor has been working with the United States Department of Defense. We've received contract grants for military medicine to support our next generation analyzer, which we're getting set to launch soon. We've received grants from the National Institutes of Health because our studies have shown that when you utilize our diagnostic, that it's led to substantial savings of lives and resources, et cetera. So we're partnered with some of the core elements of our healthcare system to move the technology forward.
So let's since you brought this up, so Department of Defense, came to you. Now, how big is the unit that you have been using since your father invented it?
Yeah, so let's talk about that. So starting, picking back up the story. So starting in the late 80s, we had something really important happen, which is we had the microcomputer revolution. All of a sudden, we could do all of the complex calculations around our test on a microcomputer. And then we came up with a design for a tabletop analyzer with a microcomputer unit attached to build out. And we went through the arduous process of navigating approval with the FDA and launched that system at the end of the 1990s. Took about a decade of work back then to develop the technology. Multiple systems had to be invented and patented to create something that could reduce the time to do the test from about 8 to 9 hours down to about 60 minutes. So when you move it into a 60-minute time frame, that means that you can make this measurement and then make a clinical decision rapidly on the back of it. So that tabletop unit has been refined over the years and updated since it started to be used in the early 2000s. As I said, we've had many, many studies. We've had over 70,000 tests performed at leading medical centers across the country. A lot of this information is on our website. And we started to talk to the U.S. Department of Defense. This is back over 7 years ago now. And the DoD said to us, look, over 30% of our warfighters die from hemorrhage or hemorrhage-related shock conditions. We have a problem. The corpsmen, the people that treat the wounded fighters, don't know what their blood volume is. They don't know who needs a transfusion. They don't know who needs saline. They just can't triage these patients effectively. And remember, when you're in an austere combat environment, every unit of blood counts. You don't want to waste one, but if you don't give it to people who need it, they're going to die. So They said, we love your technology. We understand that your technology is so much better than what anybody else has. There's one problem. You have a tabletop unit. We want you to make something that could be deployed in an austere forward environment. So they challenged us. They said, can you create something that's small, portable, ruggedized, rapid, and simple that can then give this key information to corpsmen in that frontline environment, and also, of course, could be used back at the main hospitals like Ramstein Air Base and other areas like that, Walter Reed. So we can use it throughout the continuum of care for our wounded fighters. The lucky thing is that just like in the 80s when the microcomputer came out, we've had a revolution in computing power now. So your iPhone is thousands of times more powerful than the best computers back in the 1950s and 60s, et cetera. So we realized that we could do it. We entered into military contracts with them. We've won half a dozen contracts with the U.S. DoD. That means the Army and the Air Force to support our work. And we created a really small portable analyzer. It weighs just a few pounds. It's about the size of a shoebox. And it's much simpler and much more rapid than our first generation system. We've completed it, we validated it, it works. Then we entered into clinical trials and then submitted our application and started working with the FDA to get clearance towards it. And so we're anticipating to file for our what's called the 510K, the expedited 90-day review for that shortly. And with the approval of that, we think it's going to be another leap forward. Why? Because the new system can generate a blood volume result. It's going from 60 minutes down to as little as 15 minutes. And it's portable, it's rapid, it's much simpler. And so we think that this new system is going to be another pivotal breakthrough in taking the technology and making it easy for workflow. So it's exciting. The military can think about acquiring this as part of their medical care for forward deployment, but the really big market is on the civilian side. That means physician offices potentially, as well as all of these hospitals. So when you think about TAM, there's over 5,000 hospitals in the United States. There's many multiples of that of physician offices that could potentially benefit from this as well. So we want to see this test become very broadly used as a standard of care in a number of different areas, because we know that with optimal diagnosis, the care of people is going to be transformatively better. And we see that all the time now, because we're in, dozens and dozens of hospitals, leading centers across the United States. And we hear from clinicians all the time about how they've had tough cases or problems with somebody, and then they ran the test. The test gave them phenomenal results that they didn't expect, they adjusted the care, and then the patients immediately got better. And that's really what our mission is to make a difference around one of the most central problems we see in medicine.
So with this new unit, does the old unit go away, or and you just focus on the new unit?
Yeah, we're going to transition out of the older unit towards the new unit, and that's helpful. But I want to be clear with people: we're seeing over 100% revenue growth year on year, even with our existing systems. So there's just been a really strong build, a lot more clinical awareness of the benefit of this, a lot of more papers coming out. And so, people are looking at research that's come out of, Duke and the Mayo Clinic and other, really top institutions, and they're starting to realize how much of a difference this is making. And so I think that is leading to adoption of the technology, and it's really still in its earliest days. I think the public isn't always aware that, medical advances come in a kind of uneven pace, and they sort of perfuse through the system. It takes time for all of the practitioners, maybe who didn't get trained in your technology when they were coming up in medicine, to learn about it and to adopt it. But we have some really great outcomes that are raising the awareness of it. The other thing that I'll mention for investors who think about investing in this sector is you've got to make sure that any technology or medical device or pharma that you're looking at, it's got to have a few minimum things. So number one, it's got to show that it solves a big clinical problem that's really a true need. That's great. The other thing you got to make sure is that it has a workflow that people can do. And the next thing is you got to make sure that there's reimbursement for it, right? So if there isn't reimbursement, it doesn't matter how good it is. I hate to say it, our healthcare system doesn't pay for it. Nobody's going to use it. They've got to be able to use it. In other words, that's why shrinking the workflow down with our new system is going to help, we think, speed adoption and utilization even more than it is now. And the last thing is you got to really solve something that nothing else solves. And we think that we have that trifecta in what we're doing, and we're getting the message out.
I think you're absolutely right. So the reason that the DoD, they're looking at putting these things on their Medivacs, right? The helicopters.
The DoD is interested in even further next generation technology with us. I think that the workflow for them is something that the Air Force is certainly interested in, being able to have access to our technology while on an airplane, for example, ferrying somebody from a forward deployed place back to a rear main hospital, for example. So they would like to be able to use it for in-flight care. The Army is very interested in this for, as I said, for forward deployment, and think about like a kind of MASH style unit, et cetera. And that kind of utilization varies a lot with where we're at. If we're not in an active war, and I don't know of a person who wants us to be in one, then the demand for the systems will be to have them in place, but there won't be necessarily the utilization around it. But that doesn't really matter, because it's really about the civilian side. And there's just a ton of need for this on the civilian side. On the government side, there's a lot of need for it in the VA system. So it's not handling combat casualty care if there isn't a lot of active fighting going on, but we still have a lot of our veterans in the VA system who have heart failure, or who are dealing with, hospitalizations and surgeries that could benefit from the technology. So we'll be in the government vertical even more, and we do have units in the VA system right now, but we will be in the government side probably much bigger on the VA than we'll ever be in terms of, or I hope, active combat casualty care.
Why would every ambulance have one of these on it?
So, the test is really designed to give a reading of the patient's volume when they're in essentially a semi-stable state. When you've got somebody who's in an ambulance, or they're being actively given fluids and resuscitated, they're in a very disequilibrium, right? So they're giving them a ton of fluids, and they're just trying to get their vitals stable. Now, at a certain point, when they are stable, they're going to want to try to move their baseline to an optimal place. That's when the test is more used. So it's not used in the urgent care phase, but there's a tremendous amount of need to manage patients' volume post-surgically. So, for example, a lot of people survive an operation, and then you hear 4 or 5 days later they die in the hospital. That's because in the post-surgical care period, everybody's really focused on making sure that their volume is under good control and the rest of their care is optimal. Now, there's a lot of chronic conditions, like I said, on the outpatient side, where this is incredibly useful. So just think about, again, if you're on some kind of medication, if you're taking a diuretic to control your blood volume or vasodilator, these types of medications are routinely given. A lot of people have problems with the medication not managing their care effectively. And what that means is that if you don't have these conditions, like for example, if you have a blood volume derangement where you have too much blood volume, it can lead to hypertension or high blood pressure. But even more than that, it can lead to a kind of cardiac remodeling over time or kidney damage. And so again, getting the pressure under control, but getting the volume and the pressure under control is what leads to the optimal result. So we're working a lot with care teams, we're working a lot with physicians. That's why there's a constant amount of research and engagement with what we're doing, even as we work towards commercializing our products to hospitals and other and physician offices and places like that.
So, Michael, I want to highlight something here because you sound like you've been doing this your whole life, right? But actually, when did you actually come on
Yeah. I actually joined the company as an executive VP back in 2014. My prior career, I spent more than 20 years on Wall Street. I was actually a quantitative fund manager. I was one of the early employees at D.E. Shaw and spent nearly a decade at Millennium Partners. Both of those are, hedge funds that are now amongst the top 10 in the world. I also was a managing director at Morgan Stanley as well in their asset management division. So I had a background on Wall Street and in the capital markets. And then I joined Daxor as first a member of the board of directors. And then I started to take a role in the operations of the company. And then unfortunately, my father was diagnosed and passed away from pancreatic cancer in 2017. So I then became the full CEO. Thank you. He worked until the last days of his life and was very passionate about the mission. And I really feel the same way. And something that I want all of our investors to know is we're really committed to having the company be a great financial success because we see that that's the vehicle for how we're going to affect the change in the world of medicine. You need to have great technology and you need to be focused on making it a big success so that you can then invest the time and the resources into raising the awareness amongst practitioners, into innovating your systems, into making sure that people adopt the technology. That's how capitalism in medicine works in our country. So as a small company, you have to figure out how to operationalize it and make it work financially and then grow the company so that you can affect the change in the world that you want to see.
So I want you to highlight something. So because of the fact that you do have a little bit of Wall Street background, uh, which is something I love to hear because you and I both know that Wall Street isn't necessarily a small business's friend, right?
Yeah. That's an understatement, I would say. Yep.
So you are fully aware of all the shenanigans that happen in Wall Street, and you're not going to be one of those guys that's going to get taken by that. So, and to prove that point, when you went public in 1971, how many shares did you go public with?
So we went public with about 5 million shares in our float. And then over time, actually, what the company did is we just made money, though, and just we didn't raise money from our investors. We just focused on our operations and we generated a lot of free cash flow and we reinvested that into conservative things like utilities and bonds and stuff like that to throw off more money from our retained earnings to then again subsidize the growth of the company. We did raise some money 15 years later in 1986. We raised $6 million in a share offering. Then we didn't go back to the capital markets again until the year 2020. Between 1986 and 2020, though, we did buy back a lot of our own shares. So the free float of the company now stands at approximately 4.9 million shares, maybe fully diluted. We're back up to around 5 million. So we're a company that's been in business for over 50 years. We have not expanded the share float, and we are still majority owned by the founding family with over 58% of the shares. So we're really invested with our other shareholders in a single share class. We sit right alongside our other shareholders, and we're just committed to growing the company the right way. And we are very careful with the role of, banks and other capital markets partners. You have to really know your way around a little bit, because there are some ways that companies can raise money that's shareholder friendly, and then there are some very toxic structures that are pushed on a lot of small companies. And unfortunately, if the principals of the company are not familiar with the capital markets, there's a lot of mines and traps in the things that are offered to small companies.
You said something to me when we first met, which I found fascinating. I mean, you worked in Wall Street, but you worked at, like you said, a quant fund. You were dealing with very large companies, right? So you really never dealt with the small and micro cap space.
Yeah, yeah. I never I never traded companies that had a market cap under $300 million. And I, with the financial models and the things that we did, some years I traded billions and billions of dollars worth of equities, but I wasn't involved in, raising capital for stocks, for companies in the stock market. I was an investor. So I kind of understand a bit how investors think or look about a company to try to determine if it's a good investment. And I know something about market trading microstructure as well. And I think the problem in the micro cap and the small cap market is a lot of the C-suite executives might have a great background in the specifics of the company, right? They have expertise in their industry, but they might not have really good capital markets advisement in terms of how to be an effective client with the investment banks or other sources of funding. And so you can get into a lot of problems as a small cap company if you don't understand the market structure. And there are friendlier investors and there are some sharks out there that you really want to avoid.
It was funny when you told
problem.
me you had a firm call you and wanted to raise wanted you to do a raise and was telling you how good warrants were.
Yeah. So just so we're clear, our cap table is very clean. We have no outstanding warrants or converts and almost no debt. I was pitched a deal to raise money, and this banker was like, and we'll even put a warrant on the deal, and then when they cash in the warrant, you'll raise even more money. And I was like, I listened to the pitch, and the guy didn't know I had a background in Wall Street and that I'd been a options trader and a warrant trader. And I'd done, investing, for over 20 years. And it was just amusing to listen to the pitch. It was also kind of horrifying because I could see how, for people who don't have a background in it, they would think that they're getting some kind of great deal when, in fact, they're doing something that's really, really bad
Your
for the
response
company.
you told me your response was, boy, those warrants sound really good. Maybe I should do 2 or 3.
Yeah, I was like, they were like, you'll put a warrant. I was like, great. Why don't I put 2 or 3 warrants on there? I mean, it sounds great. I mean, we should all remember a warrant is an option, right? And the whole maxim on Wall Street is, don't give someone a free option, right? Because options have value. So don't give away something with value for free. So, sometimes investors don't realize that the problem with warrants in a lot of these deals is that there's a certain subclass of, I'll call them investors, but they're not really investors in your company. What they are is they're people who will buy the deal and then sell your stock immediately, and then they retain the warrants, and then they short your stock to do something called volatility trading against the options that are attached to the deal. And even worse than that, some of these people might have potentially illegally shorted your company before the offering and then covered it back in the deal. So, I mean, there's like a class of somewhat parasitic investors out there or deal people that you really need to steer your company away from if you don't want to get hurt, in my opinion.
So that brings us to why or how you've been able to maintain a very very small float and
Mhm.
amount of shares outstanding. that does make that, and you have high insider ownership, which are all good things to me. All of those things are very good, right? Because everybody's aligned. That what makes it challenging is there's not a whole lot of shares out there to trade, right? I mean,
Mhm.
liquidity becomes an issue.
I mean, a lot of our investors are um, sophisticated, high net worth individuals. These are people who've made a lot of money being early investors in other very successful med device or biotech or pharmaceutical companies. They do very deep due diligence to understand, the product. But, one of them said to me, he said, look, Michael, when I buy a stock, I'm not just betting on the horse, I'm also betting on the jockey. So I need to understand your plan, your mentality around it and stuff. And I appreciate that. What it means is there's not a lot of loose shares around. Generally our stock, for those of you who follow this kind of thing, tends to have a zero or a negative beta to the stock market. It means that people aren't just like buying and selling our shares based upon how the market's, jiggling around. And there's just a lot of deep holders that have the strong feeling that, our stock is massively undervalued, and they are waiting as we hit our milestones for the market to substantially reprice our stock. And, I'm a big holder. I'm actually the largest shareholder. I just bought stock the other day in our company. We file Form 4s because, again, I'm an insider and I have certain windows period. Since we just announced earnings, I'm out of the blackout window, so I can transact in the market. And I think you gotta look at what people do and not what they say. So what I do is I'm paid a relatively modest amount of money per year. I'm one of the lower paid people in the company, but I'm the largest equity holder, and I'm a big believer in our mission and in our progress. So that's how I want to incentivize all of our top executives, and that's the mentality of the stock in terms of how we're gonna manage things going forward.
So this is why I think this is such a tremendous timing for this stock. So in your letter to shareholders, I mean, you talk about the fact that you're now going to be filing potentially for the 510K fast track status on the. So let's talk about your business model for a minute.
Mm-hmm.
So if you've got this now, you had these kits that you use, right,
Mm-hmm.
to do this testing, and you
Mm-hmm.
recently just did an acquisition of one of the
Mm-hmm.
key components to that kit.
Mm-hmm. Right.
Okay.
Yeah. So just so everybody understands the model of it, so we're a medical diagnostics company, specifically a radiopharmaceutical diagnostics company. So what we do is we sell a a pharmaceutical, which is it's technically called HSAI 131. What that is it's a very, very mild radioisotope that comes in a preloaded syringe. So we take those syringes are technically a pharmaceutical. So every time our test is run, a care team uses one of our syringes, which contains the drug that we sell. And then it's injected into the patient, it circulates in their bloodstream, and they draw blood from the patient. And from there, we're able to determine all of the metrics in our test, right? Now, that blood that's drawn is then put into an analyzer, and that's what gives the results. So what we're looking to get approved is this next generation leap forward analyzer. That's the one that was paid for substantially with a lot of contracts from DoD and our own investments in the company. That analyzer will allow those blood samples to be analyzed a lot quicker. So how does the company make money? Well, every time a test kit, meaning that has that syringe and the ancillary components, is utilized, that's when the company makes money. So this is sometimes called the so-called razor blade model for a company, right? You don't make money off of the handles, you make money off of the blades. We're not trying to make money off of the analyzer that analyzes the samples per se. We're really trying to, grow the business by having people run the test. And so we do charge for the analyzer itself, meaning that physical component, but that's a minor piece compared to the recurring revenue that comes from running our test. And that's really important because, we have reimbursement already by both public and private insurance for the test. That is a key thing. A lot of people think, oh, the big thing is getting an FDA approval. Well, first of all, once you get an FDA approval, that's nice. But now you have to commercialize it, right? So like you have to actually, and then you have to have evidence that this thing that you have makes a big difference. And then you have to prove that they can put it into their workflow. But even more than any of that thing, you have to make sure that they're going to get paid for using it, because if they're not paid, they're not in the business of going bankrupt. So you have to have reimbursement. That means you have to convince the payers, i.e. the insurance companies, that there's a value to what you do. And we have Medicare and
your
CMS.
comfort level is not necessarily anything that the insurance companies are going to care about. What they want to see is statistical, not coming back to the hospital, right?
I mean,
Stuff like that.
this is already covered. There's already coverage determination for this. So, there's more and more evidence coming out, but our test is considered the gold standard. This is proven technology that's been around for quite a while. So there's no question around coverage determination for us, which is really important. I think that we are going to start with this next generation analyzer, which is effectively going to make the test a lot easier and more rapid. But we already start coming out of the gate with approval, reimbursement, customers, a commercialization team, a customer base that wants to adopt it. So this is an iteration of our systems, not a new launch. A lot of times people are buying a company on the promise that they're going to get approval and that they're going to commercialize it. And we have de-risked that process. We're already far down the road. And one of the big things is, in our shareholder letter, we shared that, from an operational cash flow position, not inclusive of non-cash items or CapEx, that we've been able to achieve an operational break-even in the company, even as we've been moving things along in the first 2 months of the year. So we're really excited about the cadence of progress that we've been making. And that's all before our next-gen system launches, which we think is going to really turbocharge demand.
When do you anticipate? So you said 90 days is about the.
There's a statutory review of the filing that's 90 days. FDA can extend it beyond that if they have further questions, et cetera. Now, we did submit for a dual approval last year, and we have worked with the agency extensively around it. We decided to refile it as what's called a sequential single strategy, which means, again, I don't want to bore everybody with all this stuff, but there's basically, you get an approval under the 510K, and then there's something called a CLIA determination, which is the lab complexity level. We're going to file for a so-called dual application. We've actually changed to a single sequential application, which means we're just going for the 510K. 510K is supposed to be a 90-day review process. They've already seen our application. We've been in talks with FDA. We've generated a lot of supplemental information for the device to give to them, and we'll be presenting it to them shortly. So we look forward to working with the review team. The FDA has the highest standards in the world around medical safety and effectiveness around drugs and devices. It's a very high standard to me, but it also means that when you have an FDA-approved device, and remember, our existing system is an FDA-approved device, right? You have an FDA-approved device, it means that you have achieved the gold standard for effectiveness around the world. It also means that you have a substantial barrier to entry for anybody else, because it is very, very expensive, very, very time-consuming and complex to get the FDA to approve things. I think most Americans would be shocked to learn that there's probably about 5,000 active drug candidates. In a year, only 40 new drugs in a year on average, to my understanding, are approved. So a tiny, tiny fraction of companies actually achieve approval and then also reimbursement for their product. So it's a really important milestone.
It doesn't hurt that you have, one of your biggest customers is the Department of Defense that would like these things as soon as humanly possible.
I mean, we're really from an R&D perspective, it's our distinct honor to work with our nation's military. We feel passionate about creating a system that will save the lives of our soldiers. We know, though, that the way military medicine works is they're always looking to work with companies that have a substantial civilian side of their market, and the reason for that is they know that their demand for their products are going to be very variable. If there's some kind of or they might ramp up and want 10 or 100 or 1,000 times what you make, but they want to make sure that you're going to be around. So what that means is they want to make sure that you have a book of business to help out on the civilian side. It can be on the VA side, it can be on private hospital side, so that you're around as a stable company. But we've been able to achieve contract awards, what are called SBIR phase ones, phase twos, and other contract awards. And those awards are incredibly competitive. Fewer than, on average, 1 or 2% of companies get those types of funding awards. And then to get a phase two award on top of it. So, I would say that we've been amongst the elite of the small companies that have gone to the DoD with an innovative medical solution that can really change things. And they've been wonderful to work with. We're proud to work with, the Air Force's 59th Medical Wing and the people at the U.S. Army Surgical Research Institute, and a number of others that have really believed in us as a company and understood the medicine and the science and the technology of what we're able to achieve. So we're super excited to get this thing approved and get it into their hands. But from a revenue perspective, I would say that the biggest revenue by far is going to continue to come from the civilian side of our business.
So let me ask you what you see. How are you for cash right now? Or do you see any need to do any kind of a capital raise?
So, the standard answer is to always say that you're looking to be opportunistic if it makes sense for the business. The good news is that because of our cash flow and our break-even status, operationally, we feel that we're in a position to continue to develop the company without necessarily having to raise money. The last time we raised money was almost 2 years ago. Again, we've raised money in the last 50 years, since, as I said, we raised money in 86. And we raised money in 2020. That was the next time we raised money. We raised some money in 22 and 23. We didn't raise any money in 24, and we haven't raised any money in 25. So, we've been able to get a lot of non-dilutive funding from these contract awards and matching awards and grants. And it's nice to see the government support, made in America products. We are headquartered in Oak Ridge, Tennessee. We have a 20,000 square foot fully owned facility there. We assemble all of our products here in the United States. We do all of our R&D with American engineers and on-site in the great state of Tennessee, which is a very business-friendly place. So, we're really gratified. And we've been supported, for example, by an institution called Launch Tennessee, which helps innovative companies that have received contract awards in the state of Tennessee. They've given us actually over $500,000 in support in the last few years. So we're really building this company at a grassroots level, but with resources from various different entities that have allowed us to avoid going to the capital markets in deals that are unfavorable, to build up the intellectual property and to launch this next generation system. So that's what's really exciting for us.
This is anybody that follows me knows that I have a big focus on finding companies that can have a positive impact on humanity. Impact companies, right? Impact leaders. And this thing checks off every box. I mean, literally every box, right? You have a product that saves lives. That's fair to say, right?
Without question.
Without question. You have a product that is going to help our military. You have a product that's made in America. I mean, I don't have the Make America First. That is how I feel, right?
Mm-hmm.
And you and I come from an age when there was a lot more pride about buying American than there is today, right?
Mm-hmm.
And a lot more pride about being made in America than there is
Mm-hmm.
today. But those things are all really good things. And I like the fact that we're trying to go back to those times, or at least emphasize those things. So I look at this story, I look at everything, I look at how you have grown this business without going out, and you probably sacrifice speed,
Mm-hmm.
but so what, right? I mean, this is the smart way to grow. Growth consumes cash, right?
Mm-hmm.
In a significant way. So I think you've done a phenomenal job, man. I think your dad would be very, very proud of where you are today.
Thank you. I mean, we look, I think it's important for small companies to get the business model right before stepping on the gas super hard. I mean, we are growing a lot, right? So, in our shareholder letter, I shared that our revenue went up 116% year on year. Our kit sales rose over 60% year on year. And we did that without substantially raising our cost basis, meaning the cost kept contained and then the revenue more than doubled. And that's because I firmly believe that you should refine the model before you scale it, right? If it's kind of like if you're going to go nationwide with your coffee shop model, make sure that the first few coffee shops are working really well. Then you franchise it across the country. So I think that we've been refining our technology. We've been, increasing the evidence, and we've been much more effective at operationalizing this and making sure that the business model works for the care teams and for the physicians. And that has helped the adoption as well. So we're doing all of these things at the same time, but we're also doing it in a very shareholder friendly way. I think that if we wanted to go a lot faster, we could have, but it would have been a little bit sloppier, and it would have certainly involved a lot more dilution for all of the shareholders. And I don't know that we would be ahead of where we are. I think, a lot of people think that the answer to things is throw more money at it. Look at our education department. You know what I mean? Look at we spend so much money, with these kids in schools, and the results are just terrible. Well, a lot of times when something's broken, more money is actually not the answer. More money just fuels the beast that's already broken. So, a lot of times fixing something and improving it is about process improvement, refining the business model, digging in hard, and then scaling on the back of that. And I'm happy to say that I think we're in that scaling mode right now. We're looking to actively hire and add to our team. Not only do we make our products here in the United States, we sell them with our own direct sales team. We do the R&D here.
How many people do you have on your sales staff?
So right now we have a direct sales team of about a dozen people, and we're looking to add to that. And there's also the opportunity for us to work potentially with some third-party distributors as well too, in order to scale the business. So we're actively, adding to the sales effort.
And to be clear, this is not just this isn't a product that just gets used in the U.S. This is global, right?
Well, there's certainly a tremendous number of patients overseas that would benefit from this. One of the things we did is we got something called ISO 13485 certification for our facility, which is an international standard that will allow us to manufacture and to export as well. Right now, the problem we have is we have far more places that we can go to than we have staff to even keep up with the demand. That's just the issue. That's a nice problem to have
Right.
just more places to go to, because we have penetrated far less than 1% of the total market. So, you think about addressable market, you think about, obtainable market, it's in the millions actually. And so in terms of the number of patients, and these patients all need anywhere between 1 and 3 of these test kits. So it's really a tremendous opportunity, obviously.
Massive.
Massive.
And
Yeah.
bringing that last piece in house, that should help improve margins. Yes.
I think it'll help improve margins. We're operationalizing from a key supplier of ours. It's going to also allow us to expand our product offering actually to a kidney function drug, which again, we think has a lot of promise. But even more importantly, it's going to allow us to scale to keep up with demand. And that's really the key for us. We need to make sure that we can 10x, 50x, 100x what we're producing to be able to keep up with what we think is the real market opportunity out there. And we're just incredibly excited to save more lives and to help with more patient care. That's really, at the end of the day, what this is about. There are so many people who are suffering needlessly or not getting their optimal care, and it affects people's lives. It's huge. It's just huge.
This is such a this is a hidden gem for sure, right? That's been around since 1971, established by a man who was a workaholic that was always taking care of patients, right? I mean, this is a feel good story. I don't care who you are, unless you're a heartless person. This is a feel good. I can feel good about supporting and being involved with this company, right? I mean, those are, I mean, those are intangibles, but I think those are so important, right? I mean, because it gives you that conviction when maybe the stock isn't acting the way you wish it would act, but Wall Street doesn't always make sense. Wall Street's not always logical, right?
And one of the big problems, I think, as an investor, and I'm very sympathetic because I know certain things running the company that obviously people on the outside can't see, right? One of the big problems is when you have a company with a disruptive technology, a disruptive tech company, right? And that's really what we are, right? We're a disruption to the standard way in which medicine has been handling these problems for years. The problem for investors or the challenge is, okay, does this thing really solve a big problem? Will they succeed at operationalizing this? What about competitors? Will they be overtaken? Do they have good IP? Do they have good barriers to entry? Do they have, a huge market leadership? How will this company achieve this thing? And, if you look at stocks like Nvidia or Tesla or many other companies that they can often go through periods of years where the companies sort of trade sideways. Underneath it, the companies are actually doing incredibly important things. They're building battery technology plants or they're doing key supplier deals around their chips. But the investing public doesn't necessarily understand it. They don't see the whole thesis. They don't see how these things are coming together.
Right.
Then all of a sudden, the companies start reporting massive profits from all of the positioning and all the work that they've been doing up to that point. And then things start to ramp massively. And then Wall Street kind of catches up to it. So, for people who think that the stock market is efficient about how it prices things, that's obviously a joke, right? Because companies' value goes up and down by 30, 40, 50% sometimes, particularly around disruptive tech companies. And nothing's changed about what the company's doing. It's just this big question around the prospects for these companies. Now, the one thing I will say, though, is that med device, pharma, et cetera, moves at a different clip than, let's say, tech companies do, or like software companies. It's like, you're like, this is great. I built some app and I've got like 2 million users. That's great. But what's the barrier to somebody else knocking off your app? And then they start to come in and compete with you, right? Yep. So in the med side, it's very, very hard. It's a highly regulated, capital-intensive, super complex business with very long timeframes that are mandated by nothing you can control. Like the FDA is going to take its time, usually years and years, to approve any kind of change because this affects patients' lives. So there's a massive moat around this business. Healthcare is one of the biggest areas of spend in our entire economy. It's only increasing with the boomers going up. So you've got to have the fortitude to invest in this. But once you establish something, obviously it can have tremendous value and grow from there. So it's a little tricky. It can be complex for people to understand the medical claims because a lot of companies run around saying that they have something that's pivotal or important, and maybe it is and maybe it isn't, or maybe somebody else has something just like it, et cetera. So you have to kind of do your homework around it. And so I'm appreciative of people who sometimes say, they're like, Michael, this is, your shareholder letter is amazing. This is great to see that the DOD and the NIH and the state of Tennessee and all these different entities are behind you guys. And the medical outcomes that were just published in this leading scientific journal look great. And this key doctor at the podium at one of the big conferences was just talking about how great your technology is. Why isn't the stock moving? And I'll just say, look, we're in the business of building the company, not the stock. But I do know that eventually the stock market starts to catch up. And I do know that, the way that we report right now as a consolidated 40 Act company is one of the reasons why it's harder for people to see the numbers. As we convert over, as you mentioned earlier, I think it's going to be easier for people to see the metrics around it and get the pace and to be able to do it. There are some analysts, though, that cover our stock. Maxim's a boutique investment bank. They cover our stock. And so there is information out there for people who want to see it from third parties as well. And I do appreciate, obviously, being on Alpha Wolf. This is how we're getting the message out to, stockholders and potential stockholders to understand what we're doing as a company.
Look, this is a story I'm happy to share, right? I mean, this is like I said, this is a company you can feel really good about, and the fact that the market is not really up to date and up to speed with everything, this is an advantage. This is where you have your advantage, right? I mean, you're not the big hedge funds, they're not going to be looking at these guys. I mean, right?
That's you kind of have to, like, small cap investing has this amazing ability to generate huge returns for investors who are willing to do the hard work of rolling up their sleeves. And look, a large hedge fund might be like, we don't want to take a trading position for less than $10 million because even if it works out, it's not going to move the needle for us. And it takes a lot of brain power to decide whether to invest in something. But as a small investor, you can find a niche and actually beat the big guys. That's the whole thing, right? You can find smaller opportunities that become huge outsized returns for you.
What valuation do you think you would have to have, Michael, the company then you actually start getting some institutional action?
I think that as your market cap climbs over about $150 to $200 million, some smaller funds start to look at you much more seriously. I think, when you're sub 100, you're really in the domain of like high net worth individuals. Some smaller funds might take a position in you, but you tend to be like in this valuation niche. And so, you're too complicated for your average investor who doesn't really roll up their sleeves to get into a story to understand it. But then you're in this other area where you're too small for the really big guys who are sophisticated enough to understand it. So that's why there is some really smart people that play in this space, buy these types of companies. And, those are the people that have been big holders in the stock. And that's actually one of the reasons why our volume is so low. Those guys who've been accumulating shares in our company, they really hold on to them.
And they're not going to sell it.
They don't want to sell it. Well, I've talked to some of them. They're like, no, this is my 10 or 20 bagger. They're like, I don't know when we're going to see exactly this happen, but that's what they say. They're just like, we know that because they've ridden this story before with other companies.
Absolutely. So, I mean, this is the kind of stock that literally can change your life. Can I tell you exactly when it will change your life? I can't. My crystal ball has never worked properly. It has always taken longer than I think it's going to take. Always. I don't care how obvious the story is. It's that I never know what the thing is that's going to send the thing going. But when then it goes, and then sometimes I look at I look at the thing that said it. It was like, man, they had about 28 other announcements that were 10 times more important than that one, but that's the one that sent it for whatever reason. Right.
I agree. Well, I mean, look, we live in this economy where there's, a lot of people are doing stuff on social media, could be, chat boards or TikTok or whatever it is. And then it can become, and it's also often linked to some kind of pivotal announcement, et cetera. And then you can suddenly see the stocks not only trade up a lot, particularly in a low float name, but also with massive volume. And we've seen that at different points as well.
I'm going to bring up your chart real quick because everybody knows I'm a fundamental guy, but I took a course in technicals like 17 years ago. I could never understand why technical guys, what's it going to tell me about where the stock's going, right? And now it's the first thing I look at. I mean, it really is. What I try to do is align a good-looking chart with a great fundamental story, right? If you can do the two, then I think your odds of success become greater.
Because the chart can tell you, for example, when you see a resistance line or when you see a support line on a tech chart, from how I think about it, a lot of times that tells you something about investor sentiment. If you see a hard floor on a stock, that tells you that there's probably a bunch of opportunistic investors out there who are waiting for it to dip down, and those are your bargain hunters. Those are the people who are waiting for the after Christmas sale. They're like, great. A friend of mine said that the stock market's the only market in the world where when things go on sale, people aren't happy. Right? It's like,
that's crazy, isn't it?
Right. You're like, you like the company at 10, you should be backing the truck up and buying it at 7 if nothing's changed. But everyone's like, no, I'm not happy because,
Because Wall Street has done a phenomenal job of making retail investors believe a couple of things. Number one, never buy low price stocks because low price stocks are low price for a reason. They're garbage. Not true. And never add to a losing position. Another bullshit.
Right. Whereas dollar cost averaging is a well-known strategy. And, I think the first lesson, people ask me, they're like, well, I don't know anything about the stock market. How do I know? Blah, blah, blah. And I say, look, you have to understand that a good company might not be a good investment and a bad company might not be a bad investment. right? You have to line up, as you're saying, the fundamental story with the valuation. Where
Yep.
Daxor's market cap right now is at like around a $40 million value. I mean, I've been buying our own shares, but that's my opinion.
So look, I'll reemphasize this. This could be a challenging stock to build a position in.
Yeah.
I could also say this though, and I'm going to say this. I highly recommend buying just one share. I could tell people to buy one share, right? I mean, nobody's betting the house if they buy one share. And the reason I say that is this: you want to pay attention to this story. You want to keep this thing on your radar, and it's easy if you don't own it. It's easy just to forget about it and get taken other places, right? The latest hot sector of whatever, it's AI or it's marijuana, whatever it is, it's easy to forget. This is one you do not want to forget. I'm really, I want to try and drive this home. By the way, if you want to see an impressive website, you go to their website because it's one of the best websites I've seen. I mean, very, very in-depth, informative, well done. I mean, fantastic, fantastic website. Everything you're going to want to find is there. I mean, you can research the heck out of this company, and all of that information that you absorb is going to make you have conviction, right? You're going to have conviction, and that is the thing you need because markets, 90% of stocks are going to follow what the market is doing. Right now, we have some geopolitical crap going on. Everybody's freaking out. Okay, 90% of stocks are going to follow what the market's doing. This one actually kind of bucked what the market was doing the last couple of days, right?
Yeah, again, we don't really have much of a beta in the market, and that's right. I mean, I appreciate you mentioning it. Our website's Daxor.com, Daxor.com. It's a good place for people to go. There's a lot of resources. People can watch some other, they can see our shareholder presentation, tear sheet, interviews that I've done over the years.
Sign up for the email alerts. Sign up.
Oh yeah,
email alerts.
Yeah, well, there's a place where you can sign up as an investor to get alerts as we put out press releases. There's a history of press releases back there for people to be able to look at as well. It's the kind of story that I think that, if people really understand what our mission is, they might be intrigued and want to become a business partner. That's what I call my fellow shareholders. You're all my business partners.
That's the way it should be viewed. See, there's so many things. I could have Michael back and just talk about the markets. I mean, fascinating guy or history. Michael is pretty sharp tack. I got to tell you, very impressed all the way around with this company, with management. I mean, and everybody knows how important leadership is to me. This is a fantastic story, man, and we're gonna get to know each other a lot better. And I think this is gonna be a life-changing stock for people because I think at this level. This is ridiculous to have a market cap at this level, right? But this is also after the small and micro cap markets have been under pressure for roughly 48 months or so, right?
It's been very hard. As soon as you tighten interest rates, the companies that are dependent upon financing suffer. Growth companies suffer. Why do growth companies suffer disproportionately? Well, most people trade growth companies on the expectation of future earnings. So if you do a discounted cash flow model around the net present value of a stock, the first thing that you put into your model is the assumed interest rate. It's another fancy dancy way of saying, like, look, if I have to wait X years for this thing to take off, if between now and then my money's not doing anything anyway because interest rates are zero, then I'm willing to wait because it's not like my money's going to be doing something better. But if I can get 5% risk free all of a sudden, and you're telling me I got to wait 4 years to see this outsized return, then I'm competing for that capital from a very attractive low risk source. So the net effect of that means that a ton of smaller companies, particularly ones that have been trapped in constantly issuing equity and then refinancing in order to build their growth model, they have been crushed. And when it's like what Warren Buffett says, when the tide goes out, you see everybody who's been swimming naked, right? So, those companies that were very dependent upon a low interest rate environment, allowing them to, finance and refinance constantly, they have been gotten particularly crushed. That's one of the reasons why 2 years ago I said, we as a company, yes, we're pushing forward these next generation systems, we're growing, but we have to maintain our fiscal discipline and get to profitability as quickly as we can so that we can avoid being one of those constant capital issuers. So, you got to move it forward, but you also have to maintain your fiscal discipline and rigor as you work the operations of the company. That's a hard tightrope to match. You know what I mean? It's like saying, you know what, you got to work out hard and you got to cut your calories at the same time. You're like, man, I'm hungry. I just worked out. It's like, yeah, but you got to cut weight, man, and you got to build muscle at the same time.
You know what? So just so people understand, with the liquidity issue, I mean, and the strong insider holding. This is a good problem to have, and I mean, maybe people might be wondering, well, how does that liquidity ever change? Well, think about how Apple ran up to, it was almost $1,000 a share, I think, at one time, wasn't it? I mean,
huge,
right? And then what did they
multi-trillion
do?
dollars.
They did it.
Yeah.
They did a what? Not a reverse split, but they did a forward split,
Mhm.
right?
Yep.
And that put more shares into the marketplace. Didn't change the value of the company, just put more shares in, and that's how you could see this company at some point increase the amount of shares outstanding. So it's not like they have to do anything dire or I mean, there are ways to do it that'd be very beneficial for everybody, right?
I think so. And I just think that the volume is going to pick up as more people learn about the story and as we achieve the milestones that we're trying to do. You can go from some obscure thing. They say behind every overnight success is, usually 20 years of hard work. So, all of a sudden, you see the guy who blows up and has a Netflix special. And they're like, man, this guy's hilarious. And yeah, but there's a subset of people that have been following all the work that led to that. So, we've been working incredibly hard for a long time to set the stage for what Daxor is doing. And, we're very, very passionate about it and very committed to doing it. So
I think your time in the sun is coming, man. I think it's coming soon. So, Michael, I want to thank you so much for taking your time to do this. When do you think we should have you back and maybe do a follow? What should potential investors or investors be looking for as key milestones for you?
So key milestones for us, are going to be around the 510K submission and approval of our next generation system, our conversion over from a 40 Act to a 34 Act reporting company, the completion of our supplier acquisition later in the year, and just updates from us around, new sales wins and new research coming out that continues to validate the value and adoption of our system. So there's going to be a steady flow of information. We generally are putting out 2-3 press releases a month. So, sign up for investor alerts and see it, continue to follow it. And I think that there's going to be a chance to check in with us. So Tim, I hope in a few months, I'd love to be able to come back and chat with you more.
I don't want to wait a few months to talk to you again, but we'll
Okay.
keep that on the private. But I definitely want to talk to you again soon. So, all right,
All right.
Michael, I'm gonna shut this off. You feel as though I missed anything?
I think you got it. And I just want to say, thank you. And, obviously, people have to always, be aware that I do my best with, forward-looking statements, et cetera, around things. They're our best estimates, but not promises of what's to come. But, we look forward to, again, having new people come in to the story and looking at our website and going to our investor section and seeing more about, various different statements, forecasts, disclaimers, and all the other good stuff that has to happen. So there you have it. That's my boilerplate legal thing that I got to say.
So you don't, Michael, what you're saying is you can't control everything.
Yeah. Surprise, surprise. If I could, then I would have a lot to get blamed for. Let me put it to you that way.
All right, Michael, hold on one second. I'm gonna shut this off.
All right.